Modified Darvis Box. First name John. How are you, John? Welcome to F.A.C.E. I know it's your first time here, and looking forward to learning. You can teach an old dog new tricks. I'm an old dog, all right, and interested in learning about this. One of my mentees uses it, so he never talked about it before. But very nice to meet you, John.
Nice to meet you. Can you hear me all right?
Yeah, got it. And your orange MDB box is on the screen. And, before we get to Darvis, I'm always interested in how people evolve and get into the business. You want to tell us a little bit about your origins?
Yeah, certainly.
Okay.
And just a sec, I'm checking to see if I've got any webcam. I just shared my screen. So hopefully everybody can see a little. I did a few PowerPoint slides to help.
I see it. How I Made $2 Million by Nicholas Darvis.
Yeah, it's a welcome screen.
You can now share your webcam as well if you want. I just enabled it.
Yeah, let's see here. There we go.
There you are, John. All
okay,
right.
Great. Yeah, I don't do. It's always a little bit of a practice to get back into the which button on Zoom to hit.
Yeah.
So let's get into this here. So I've been here. Here's a little bit more about me.
Oh, you're Garth.
What? Yeah, I know, right?
Yeah.
I tried to lighten up a little stuff because some people know of the book, How I Made $2 Million in the Stock Market, which is the yellow. I've got the yellow cover version, but there's other versions. But I've got over 20 years experience trading. I've made every mistake you can make, I think, like everybody else has.
Yes.
You don't learn by succeeding, you learn by failing and then improving on what you did wrong.
That's a pearl.
Yeah, exactly.
You do. I mean, you do. And, hardly anyone comes on and talks about it. Our biggest lessons are our biggest failures.
Exactly. I made my first trade in 1995. My parents both worked on Wall Street, but that doesn't mean you know a ton. I then got really interested in investing and trading during the internet bubble of 98 to 2000. I was in grad school at that time, and it was the most exciting period because if a company announced that they had a website, it would double overnight.
Yeah.
So very exciting times to learn. But did I really learn anything? No, I had no idea what I was doing, but I was lucky to come out of it with profits. And the best thing I did with my profits was I paid off all my student loans back then.
Smart.
Yeah, reducing debt was the best thing there.
Okay.
But some of the problems, that bear market afterwards from 2001 to 2003 or so was so vicious. And whatever you make during the uptrend, you're losing on the downtrend. And so you gotta find that method to keep the money you've made during the good times. I became a CanSlim guy using the How to Make Money in Stocks by William O'Neill, which many people do.
He's the Investment Business Daily guy.
Yeah, Investors Business
IBD. Daily. Yeah.
And really, that was the first inklings I had that there were universal things that most big winners have. And what most people do, in my opinion, are they're searching for a strategy and a consistent, repeatable strategy. The CanSlim system worked well for me because as I applied it, and because it's got looking for
relative strength
growth rates.
Yeah, relative strength versus weakness helped you with trade selection, right?
Exactly, relative strength, and it really shows you how to be a lot more selective in picking stocks that have higher probabilities of success. I had my biggest winner at that time in the next bullet there, Hanson Natural. I don't know if your audience knows Hans. It's currently Monster Energy. ticker
Oh,
symbol MNST.
okay. I remember when it was the other.
Yeah, exactly.
Yeah.
Well, Hans, all the CanSlim searching, which I did to get that system in, led me to this one stock, and so I bought it. I had $26,000 at the time. Everything, it checked every box that you could want in it, growth rates, etc. So I leveraged up my account literally 100%, and I rode that 26,000 into $1 million
Wow.
from 2004 to 2006. And let me tell you, that was incredible because you don't think that that's even possible.
Let me ask you this. You know, I talk about it's one thing to make a great call. It's better to make a great trade. The toughest thing to do is a great hold. Tell us your self-talk on being willing to give back profits for higher prices
Well,
and be able to sit for 2
yeah.
years with
Well,
something.
that's conviction tools. And that's
Okay.
what, in my opinion, a lot of people don't have.
Yeah, you're right.
The tool to have conviction. And the way it was for me, and I'll flip, was I use fundamentals. So hopefully you can see an Excel screen.
Yes.
So I'm a techno fundamentalist. I look at charts and I look at fundamentals. This, I just did Hans-H, which I have H for historical. These were the growth rates during Hansen Natural's run. The top line, green line, is earnings. The bottom green line is sales. It had a multi-year run of triple-digit earnings per share growth. It was this forecast and these results which allowed me to sit, because every day you'd look at the numbers, they were just going up, and that's because it had a great product. It was expanding, and there was really no stopping it.
You've answered my question. It was the fundamentals that kept you in the trade, because I'm sure there were things that you saw technically that said, "Hey, you know what? We could have a 50% correction from here."
Yeah, and I was
Go ahead.
Oh, and I was working in a full-time job. I was a territory manager, so I traveled a lot.
Okay, that
So
helps.
when you can't look at the chart every day or watching the ticker, then you got to rely on something else. And for me, it was that conviction belief. Now I sold out for that because I finally cracked under the emotional pressure. I'd never had a big winner like that. I didn't know what I was doing. I didn't have any mentors or anything. There was no Twitter back then. So I cracked under that. If I had held 3 more months, I would have doubled again.
Well, yeah, yeah.
But
Congratulations on that trade. I know. It's you know what I say, John. You don't expect perfection at the crap table.
Exactly. But now things get interesting after that, because then you get into the global financial crisis years of 2008, 2012, et cetera. I gave back a chunk in 2008 because, again, you don't know, it happened, but do you have that method, the consistency to find the next one and then the next one? And that's why a lot of people will make a lot of money in a trade, but then they'll give a lot back because it's that process.
It could be luck.
Yeah. To have a big winner could be.
You have a 50-50 chance of being right and lucky.
Yeah.
On any trade, right? You bet it's going up, you bet it's going down. It's 50-50 kind of, isn't it?
Exactly. And so you're looking for tools to build conviction and also to raise your probability of success. And that could be volume, chart patterns, fundamentals, etc. The more things that are check box that you're checking off, the higher the probability of success. So I gave back a chunk because, yeah, I was trying to find the next Hans. The problem is they don't come around that often. So in searching for that, Yeah, I lost some money, and I think the keys from that period was, you learn you can make big money, but then you also learn you can lose big money.
Yes.
And the key is to try and do one, but not the other.
How did you discover Darvis's book?
Yeah, so it came back to that consistency, the process, the methodology, because I was frustrated that
Giving
my
back
trades
profits.
yeah, and everything was still too random. What's your system? What's your process? So as you can tell, I harp on this a lot. So I adopted the Darvis method because I found that original canceling just wasn't working well for me. I learned about myself. I don't see certain chart patterns. I'm terrible at drawing trend lines and sticking to it. When price hits the trend line, am I supposed to be buying or selling? I don't know. Moving averages don't do a lot for me. I use moving averages as a red light, green light system. If it's above, it's green light.
Right.
If it's below, it's red light.
Okay.
Because again, whatever you see on the chart is what are you supposed to do? What's your decision? So I saw in the Darvis book a method which, I saw it. To me, the Darvis book is a rule book. It's not a cute story. Everybody thinks it's a cute story, but it's a real diary of success. So if your listeners haven't read the Darvis book, I strongly recommend it.
Okay.
This is how I break down the Darvis method. So it's really that there's 3 states of trend that exist. You're either in an uptrend, you're in a downtrend, or you're in a sideways box. And you can see on the right side the box pattern, right. Bearish and bullish. I don't really short. I'm too much of an optimist. So I make note of the ones that are breaking down, but I don't really short them because I'm terrible. I'll cover on the first green day.
Okay.
But so I'm a long only trader, but I'm looking for specific triggers, which comes along within these patterns. Whether it's going to make a new price high by coming out of the box, whether there's big green volume bars, which shows institutional demand. Okay. Maybe another trigger would be the great earnings, like Hanson Natural had. And so I found that my sweet spot is transacting on those particular triggers. And I've got some examples of a few. We can look in my chart program and I'll show you. But this basically is, you're either in one of these 3 states of trend, in my opinion. How I use it? Well, I modified it. That's why I chose my name. I really couldn't think of any other name to use. But Darvis did things in certain ways. He used daily charts to draw his boxes, his sideways. And the box is not magic. It's really just a framing tool. It's a range. Right. But he used daily charts. He got into fundamentals, but he didn't really talk about fundamentals, but I know he understood them. But again, I've broken it down into what can I do consistently and apply to every chart I come across. Does it have highs, big volume? Are the numbers really great, etc.? Darvis himself called himself a techno fundamentalist. I consider myself the same way. You got to look at both sides of the picture, in my opinion. Now, some of the extra techniques which I've had to learn is, yes, how to use moving averages, because they definitely can help. For example, a 401k trader who's at work, well, they might not have a system except shove money into their account every month, but maybe if they use like a moving average, like a 200-day crossover, well, it's a system and it's repeatable and they can use it every time. But now there's all these cool tools like volume scanners and AI and all kinds of stuff. But yeah, to me, I like to keep it simple.
Okay, let me ask you a question because, I'm curious that, say, for example, you're a long only trader and you get a breakout out of the range, and your triggers aren't there, will you not take the trade? If, say, it's not a new high, maybe it starts from a bottom, the box is near a low and ranges and bases and then comes out, it's not going to be at new highs or all-time highs, maybe, so if you have a breakout of the pattern, what is going to have you avoid the trade of your triggers if they're not there?
Yeah, that's a great question. Well, what they are that the Darvis way was only buying the all-time high.
Okay.
Well, whereas I'm willing to look at stocks that are at various stages, but here's the key: it's got to have something which I can justify. For example, let's say it's 50% off its highs, but it has it came out with some news. It has monster volume. Can I justify that based on these triggers? Yes, I can. Okay. I can justify it.
So volume's your big one.
Yeah, volume. I think volume's, in my opinion, the most important of all of them.
Most technicians feel that way, no matter the method.
Yeah, exactly. Because volume represents the overall demand. And if I don't know everything about the company, I think it's a safe assumption that other people do. Okay. And then I can trust in some of their research. Well, I won't stop. I'll do my own research on it. But usually when you see that big volume demand, it's really telling you something. You may not know about it, but somebody else does. And I've got a saying I like to use: if the big boys want it, then I want it too.
Okay. Understand.
Yeah.
Okay.
So now I'm sure people want to see some charts, what this looks like. So let me flip to, here's my chart pattern. My chart program, TC2000. So I chart on weekly to draw my boxes. Like I said, Darvis uses daily. There's a million different ways to do it, because again, all you're doing is, it's just a framing tool. Is there a range that you could frame? And then once you have a range you can frame, then you can judge against that. In the box, there's a top edge and a bottom edge. Well, now you've got two distinct areas of action zones. Maybe you want to take the box and chop it up into halves or quarters. Yeah, you could do that too. There's an infinite way of doing it. But this first chart, which you're seeing, is the NASDAQ. To me, we are in a sideways range. And it's funny. Do we have a bull market? Yes, we do. But you gotta clarify that as to which market are you talking about. So the NASDAQ is going sideways. But yeah, it's generally a bull market. Earnings are good, that kind of thing. It's above its weekly moving average. The weekly that I use, pardon me. So to
what
me,
do you use?
I use a 14 EMA. Okay. Now, there's no secret sauce in this. I use it for a very stupid reason, because when you hit daily, the moving average doesn't shift in TC2000 from daily to weekly. So I wanted something that's consistent on both.
Okay. Got it. It's based upon your platform's capabilities.
Yes, that's correct.
Okay.
But again, remember how I use moving averages: red light, green light signals. I don't use them in any other way. I do not use them to transact. I use them to take note of things, but I don't use it as a primary trigger.
Okay. The key thing is, and a lot of these things work, the most important thing is how do you manage risk when they don't work? Like, say you went with do you get false breakouts out of boxes on both sides where, you have almost you even had volume, and then it trades back inside the box? Is that your exit?
Well, I've got it. There's two different things you're doing. If you're looking to buy, if you're seeing a breakout in progress, well, you've got a defined level. And here's a great one. Here's RBLX. I'm long this one. And I've circled here. Now you can see the daily chart. So the first thing I did was I was watching it. It finally did a box per my rules, how I draw them. And that gave me a zone here about 76 or so. And that's a top edge. That's a potential buy zone. So what happened here, this green arrow is earnings. It announced earnings overnight. And I looked at the numbers and I plugged them into my Excel sheet. I thought they were fantastic. In fact, let me flip back and we'll see. You can see on the earnings Excel sheet, it's going from negative string, but look at the forecast. Oh, and I purchased this data, by the way. The forecast is forecast to be 4 quarters of triple digits. And this zero might be a bad sell. I'll have to check that. So I've got at least 3 quarters ahead of 200% plus. On the sales line, I've got at least 3 quarters ahead. Yeah, this is bad data right there, not 34 million. But I've got 3 quarters ahead of triple digit sales. This, in my opinion, that's awesome. Okay. So earnings here, I thought it was great. I was a buyer down here. And then it triggered the top of the box, but I didn't really care because I was long about 65.
Okay, so you do vary from the rules. You will use them for support and resistance to buy and sell against, but since you're mainly long only, you will use the bottom of the range to initiate anticipating a breakout.
Yeah, and in fact, the bottom of the range really didn't come into my thinking at all, because remember my 3 triggers. It had the great earnings.
Yeah.
When you see this earnings forecast that's coming, I don't even need to look at the box. That's a buy in my, my humble opinion.
Okay, because if you go to the box, you would have had a buy on a breakout on that yellow candle. It would have been you probably would have had a little bit of regret. The next 2 candles are back inside the box where it almost looks like a breakout failure. How do you handle that?
Yeah, in fact, and this is why I pulled this example up. So right here, big green volume bar. Yeah,
you risk the lows.
The institutions want it. It had its breakout. I was very pleased with this, and I was expecting it to continue and go higher.
Yeah.
Well, it opened to a gap down. That's bad, very bad in my opinion. So I was selling. I took those profits at 74 right there that next day, because it's like, well, wait a minute. If it's so great, why is it gapping down?
Yeah.
So let's step aside and see what happens. 74, well, and it turned out selling was a good decision because there were still some sellers. Now it firmed up again. And here we go. Here's another breakout bar above average volume. Oh, and this blue here, that is average volume, but I have it shown as a histogram. So instead of a line, I wanted it to only show me, I can't do it now, but I wanted it to only show me covered up instead of a line. Because this way it's showing me the big volume.
Okay.
So it gave another chance right there. And I was frustrated with it. I traded it twice in here, but I didn't lose any money. These were all break even. And then it finally took off and made up its mind and went. So my adjusted cost here is still about 65.
Okay.
So it's turning into a great trade, a nice long, and now
the third time was the charm out of the box.
Third time was the charm. Sometimes it takes a couple tries.
Yeah.
Now here's the weekly pattern on this. This is a box breakout pattern on the weekly, like was in the prior sheet here, right here.
Mm-hmm.
And here's that indecision on earnings. And then now, my computer's frozen a little bit here. But as you can see the breakout. I circled the volume day when it broke out. and now it's gone from 76 to 93, and it's looking good.
Okay, John, we're starting to run a little short on time, and I'm interested in, do you have a business model? Do you teach your methods? Do you work with people that are interested in, what you have learned? I went to, on Twitter, it takes you to another spreadsheet that shows performance. So I'm wondering, do you just trade your own account, or do you work with the public in any way?
Yeah, I trade my own account. I'm probably going to start a website of some kind, because I've been doing this method for so long. It's literally second nature to me now. And so I do enjoy teaching these concepts and principles, because again, it all comes back to what's your process, what's your method, can you apply whatever you're doing consistently? And so right now I don't have a website or anything. I'm just a private guy on Twitter, but maybe that'll change in the future.
Okay, so you could find John at Modified Darvis Box, correct?
Yeah, Mod Darvis Box,
Mod Darvis Box,
and on Twitter, and probably we'll see a website or something come out soon. I'll just show your audience here.
Go ahead.
Oh, my program's frozen up. Whoopsie. Here's one more big winner. Again, earnings upstart. But again, the box breakout, big volume weekly breakout. It hits again and again and again. Here's another one I'm long, STNG. Box, 1, 2, 3, 4, 5, 6, 7, 8 weeks or so. Volume breakout of the box. Happened earlier, volume breakout out of the box. These patterns set up again and again and again. So it all comes back to a consistent application of technique
and discipline
to whatever charts you come across.
Well, John, it really was, I want to thank you for spending your most valuable currency, which is time, being with us and showing us your work. And when you survive an interview with me, you become my trading warrior, brother. Is that okay?
Well, yeah, it was great talking to you guys. And hopefully this gets people thinking about something new, which maybe they haven't seen before.
Well, it did with me. I just used to call it, breakouts and failures out of ranges. But was very nice to meet you and talk to a guy who now knows how to trade his way out of a box.
Precisely. And by the way, for anybody who's maybe likes the short side, boxes are agnostic. You can use them on the up and the downside. You can see here's an example of a box failure. It happens a lot more than you think. So
how about just a quick flash? You were going to show Bitcoin. I'd be interested in what your box is saying.
Oh, Bitcoin. Yeah,
Bitcoin and gold. Yeah.
I don't have a good, this is the best Bitcoin chart, GBTC, since it's
I know that. Yeah.
But as you can see here, there's that big volume, but whoops, this is actually on the wrong there. But oh no, it didn't break down. It threatened to break there and then finally did on a big gap.
Yeah.
Bitcoin looks bad to me. I have no other insight than what the chart is saying.
Okay.
Whoopsie. GLD is my proxy for gold. Here's an example of it came out of a box.
Right.
But yeah, the volume is kind of lacking. So I've just been watching it, but this trend is accelerating.
Yeah.
So
interesting.
And so it's like, what is the market bullish? Well, what market are you talking about?
Yeah, it's true. So we're talking about the NFT market, which I don't understand. And there's so many products I don't understand anymore. I feel like I've entered a parallel universe. But John, thanks so much. Really great to meet you and take a look at you're sharing your journey with us, and continued green for you, my friend.
Oh, thank you very much for having me. And if people have a lot of questions or stuff or something, maybe we can find a way to get them to me and I'll answer them as best I can.
Okay. The best way to do it is at Mod Darvis Box. Thank you, John.
Thank you very much.
All right, buddy. Thanks for your time. That's a wrap, everyone. I'll see you for turnaround Wednesday, because we didn't. We'll see if we have that. Anyway, you're welcome, Monica. People are thanking you, John, and I appreciate you being here. You're welcome, Gorkum, Monica, Scott. See everyone tomorrow. Adios.